on this channel, Wealth Cycles. Today we're going to be reviewing the current status of the S&P 500, the NASDAQ, and silver. Today is March 22nd, 2024. Let's get right into it. In this chart, what we're looking at is a compilation of data going back to March 23rd of 1980, where we are measuring the price of the S&P 500 to the price of silver on a weekly basis, which will generate us a ratio, which we can see here. The gold line represents the average of that ratio. So when we take that number, it will generate a smaller number than the S&P 500, which is the larger denominator, and we get an average. And in this next slide, it looks something like this. Now, I have calculated that today the average S&P to silver price is $211.88. We have also calculated from that same data that the average of that ratio is actually 99.61. So based on that information, we can generally say that where we're at today is roughly 112.7% above average. If we take the S&P 500 price today and divide that by the average ratio of 99, that gives us a theoretical silver price of $52.64, or roughly a 112.77% increase in silver. So we've also been able to calculate the standard deviation. Plus one standard deviation in the S&P to silver ratio gets us to 174.19, and minus one standard deviation is as low as 25.03. And if we back up to that chart again, this will make a little bit more sense now that we have that in context. So all the way over to the right, you can see where we're at 211.88, and we are very much above the yellow line, which would be the average. Okay, moving on. Here we're looking at the same type of situation with the NASDAQ price to silver. This goes back to March 23rd of 1980. And again, we have a similar yellow line. This also indicates where the average of the ratio would be. We have some peaks back in 2000, the tech bubble. This peaked at 966. We're currently sitting at 692. And we've been as low as 126 in 1995 and also as low as 57 back in 2011, just before the quantitative easing began. Now, when we put this back under that same microscope, the data tells us that the current ratio here of the NASDAQ divided by the price of silver gets us 663.02. That is 172% above the average being 243.45. If we take the NASDAQ and divide that by the average ratio, this gives us a silver price in the NASDAQ terms of $63.37 an ounce, or roughly 172% increase in the price of silver. The plus one standard deviation being 435 and the minus one standard deviation being 51.67. And once again, for the reference, this is what that looks like. Roughly 40 years of data. Okay? So in conclusion, I'm going to keep this simple and sweet. On the S&P terms, the S&P 500 is currently 112% above the average ratio, and it is even more so 21.64% out of one standard deviation range, which means we are in second standard deviation range. This means that either silver has to rise $52.64 per troy ounce, or it means that the S&P needs to decline 53% to reach the average ratio, or overcorrect and decline 88% to reach minus one standard deviation before reverting to the mean, where in this case the S&P standard deviation sits at 74.58. That's just what one standard deviation is in that data. The NASDAQ story is currently 172.34% above average ratio, and it is 52.33% out of one standard deviation, meaning it is also in second standard deviation category. This means that either silver has to rise to $63.37 per troy ounce, or that the NASDAQ needs to decline 63% in this case to reach the average ratio, or overcorrect and decline 92% to reach -1 standard deviation before reverting to the mean, where in this case 191.78 is 1 standard deviation in that data. So the direction of the market is very clear here. It doesn't have to be necessarily so drastic, but it can very much meet somewhere in the middle. But either way, this data is suggesting that one asset class will be reverting to the mean while the other asset class will be catching up. So we do have an overvalued, undervalued situation in this case. Disclaimer, I'm not a financial advisor. Please do not take any of this information as financial advice. This information is purely for entertainment and educational value only. Thank you so much for watching. Please like, share, and subscribe, and we will see you in the next Wealth Cycles video. Hi, I'd like to take a minute to share with you some of our affiliate partners. Charles Schwab. You can sign up through the link below in the description or through this QR code. They are offering cash deposits when you make a deposit into a Charles Schwab account. We use Charles Schwab here on this platform for the research that we provide. Fidelity has an amazing e-money partner link. You can combine all of your online accounts and it gives you a awesome experience. It's called Fidelity Full View. Robinhood is an amazing mobile experience. It's got a fun app, easy to use, very awesome brokerage account. Customer service is great. Thank you guys so much again. We hope we can help you out and see you guys in the next video.